You don't know this about Bitcoin, stocks, and gold. As we enter 2023, it's important to pause and consider the successes and setbacks the global crypto community has faced in the previous 365 days. No investing plan could assist the portfolios in the traditional and crypto markets recover from the beginning of 2022. Investments made at the market's all-time high prices in 2021 immediately lost value when the market began to crash in January 2022. While prices were declining, 2022 also carried over the enthusiasm from 2021 surrounding non-fungible tokens, the metaverse, and record highs for Bitcoin and other cryptocurrencies. Global economies saw extreme inflation as the most powerful fiat currencies gave in to persistent geopolitical pressure. Cryptocurrency was affected by the decline of investor trust in traditional markets, and the collapse of ecosystems only made the situation worse. As usual, the information provided on CryptoFlix is not a financial advice, but rather an education topic to enlighten the public. The Bitcoin Saga. The year 2022 saw the beginning of a new crypto winter, with high-profile enterprises falling across the board and digital currency prices plummeting significantly. The events of the year caught many investors off guard, making projecting Bitcoin's price even more difficult. Bitcoin was almost halfway to the subsequent halving, which would see the mining incentives cut in half by May 2022. Every 210,000 blocks, the incentive for validating Bitcoin transaction is reduced by 50%. The most recent Bitcoin halving took place in May 11, 2020, when the price was $9,200. The architecture of Bitcoin places a cap on its total quantity at 21 million. Consequently, a halving event cuts the quantity of BTC issued onto the market even further. The halving event, subsequent scarcity, has traditionally boosted the price of Bitcoin. According to predictions made by industry insiders, Bitcoin surged for several months before hitting its all-time high in November 2021. Until the end of 2022, it maintained a value well above $15,000, according to statistics from Cointelegraph Markets Pro. The cryptocurrency industry was rife with competitors making rash predictions about where Bitcoin would go next. They were frequently optimistic, with a few accurately forecasting the Bitcoin falling below 20,000 per coin. However, many market observers were taken off surprise in what has been a turbulent year for cryptocurrency, with high-profile firm and project failures sending shockwaves across the sector. The collapse of Terra USD, or UST, an algorithmic stablecoin that was meant to be tied one-to-one with the US dollar, began in May. Its downfall pulled Terra USD's sister currency Luna down with it, as well as organizations with exposure to both cryptocurrencies. Because of its exposure to Terra USD, Three Arrows Capital, a hedge fund with strong views on crypto, went into liquidation and filed for bankruptcy. Core Scientific, one of the top publicly listed crypto mining businesses in the United States that predominantly mints Bitcoin, filed for bankruptcy on December 21st, citing dropping crypto prices and increased energy expenses. And the fall of FTX, a now bankrupt crypto trading platform, once valued at $32 billion, has shaken investors' trust as the ripple effects of the company's demise rippled across the crypto sector. According to a new CNBC Make It Your Money study produced in collaboration with Momentive, almost 60% of Americans now feel investing in digital currency is extremely dangerous, up from 45% in 2021. Another 26% think it is moderately dangerous. According to the CNBC All-America Economic Survey, just 8% of Americans had a favorable opinion of Bitcoin as of November 2022. In all, the crypto market has lost somewhat more than $2 trillion in 2022. A prominent digital such as Bitcoin have plummeted significantly below their highs from 2021. According to Arcane Research's 2022 year-end report, 2022 was the second worst performing year for Bitcoin, with the main cryptocurrency seeing a 65% drop during the year, only surpassed by the 73% drop recorded in 2018. In comparison to Binance Coin, Ethereum, and S&P 500 and gold, BTC's performance was the second worst of the year. ETH saw the greatest drop, plunging 69%. Gold was the most robust, falling by barely 1%. Binance's rise was yet another highlight of 2022. Binance's dominance in Bitcoin spot volume increased by 47% this year, rising to 92% at the current market share from 45% on the first day of the year. As the year comes to a close, Binance is responsible for 61% of the volume of BTC futures and 66% of the amount of crypto perp. In all categories, the exchange saw a gain of 10% as opposed to 49% and 56% at the start of the year. In 2022, BTC's connection with other stocks has also been quite strong. The study examined the yearly association between Bitcoin and Nasdaq, S&P 500, gold, Dixie, and ETH since 2017. Data revealed that since 2017, there has been a significant link between BTC and ETH. But 2022 was the first time that BTC showed such a high link with other stocks. Throughout the year, BTC and Nasdaq had a strong connection of 0.59, closely followed by S&P 500 at 0.56. The analysis predicts that as crypto trading activity drops over the next years, BTC's links with other assets will weaken. While 2023 won't be lucky enough to see the forthcoming Bitcoin halving, it may be a key factor in the recovery of the crypto sector. The ecosystem is now prepared for the next wave of disruption thanks to proactive blockchain upgrades, revised company strategies, and investors' attention being put back on the table. Investors can only hope that 2023 will mark a turning point away from losses and shattered trust and toward self-custody and wise investing decisions. Making it in cryptocurrency world now involves more than simply being an instant billionaire. It also involves developing, promoting, and preaching a novel view of how money will function in the future. Stock. On the last day of the year, the stock market couldn't help but give investors one last shot. Losses were recorded. Major market benchmarks did, however, conclude the session well off their lowest levels of the day, even if they finished between 0.1 and 0.25% down than where they began. Those who endured the bear market in 2022 found it to be scant solace. Financial markets saw significant losses, with several indices experiencing their worst result since the 2008 financial crisis. The index that most investors follow, the Nasdaq Composite, had the lowest performance. The Nasdaq ended Friday at 10,466 after opening the year at 15,645. Taking dividend payments out of the equation, it was down 5,179 points, or 33.1%. 4 of the top 8 corporations saw share prices drop of 50% or more for the year, while the majority of the index's largest companies failed to avoid the devastation. The Nasdaq Composite underperformed other indices due to the high proportion of fast growth companies that made them more vulnerable to increasing interest rates. The small cap stock index for the Russell 2000 underperformed as well, falling from 2,245 at the beginning of the year to end at 1,761. Without taking into account dividends on the constituent companies, the 484-point fall translated into a percentage decline of 21.6%. Small cap stocks have less space for maneuvering due to the fact that small businesses are sometimes more dependent on outside cash to finance their operations. Additionally, rising borrowing prices and an unfavorable climate for raising capital through stock offerings. There were areas with the small cap market that performed well, most notably the energy industry, similar to large cap indices. However, investors have often been concerned about how successfully smaller businesses will be able to handle challenging circumstances. The Nasdaq and Russell 2000 fared better than the S&P 500, although it was still the index's worst year since its 37% fall in 2008. The S&P ended the year at 3,840, a decrease of 926 points from its closing price of 4,766 in 2021. Without accounting for dividends received by the constituent equities, that's a loss of 19.4%. The S&P 500's performance during the year was notable for how disparately each sector performed. Healthcare stocks came very close to breaking even, and 3 industries, energy, utilities, and consumer staples, finished the year with positive returns. However, communication services and consumer discretionary stocks had the worst dips, which were a result of concerns and reversal of certain trends from earlier in the epidemic. In comparison to its rivals, the Dow Jones Industrial Average performed admirably. The Dow finished the year down 3,191 points at 33,147, but when expressed as a percentage, the decline was 8.8%. Although it didn't do that much worse than slight losses in 2015 and 2018, 2022 is the worst year for the Dow since 2008. The Dow has its share of winners and losers, just like the S&P 500. 10 of the 30 parts that make up the Dow concluded the year higher. However, 3 equities concluded with losses ranging from 40 to 50%, demonstrating the wide difference within the Dow. Gold. A modest increase in gold prices in 2022 was achieved despite an unexpected rise in interest rates and strong U.S. currency. 2022 served as a textbook illustration of gold's steady and uncorrelated performance in the race of market volatility. Retail investment, spurred by inflation and geopolitics, countered weak institutional demand, and central banks enjoyed an unprecedented year of net purchase. Gold's tenacity in 2022 was due to its many overlooked diverse sources of supply and demand. A 60/40 equity bond portfolio that had one of its most turbulent years was able to maintain its volatility thanks to the convergence of these opposing forces, which also led to a minor rise for gold in 2022 and kept it close to its long-term average of around 16%. Although the correlation between gold and a 60/40 portfolio was greater than normal, 2.1, it remained low at 20, demonstrating gold's ability to serve as a consistently reliable diversifier in times of market turbulence. It's no doubt that 2022 came with a lot of challenges. However, the good news is it has gone and we are now in another year. While we can be hopeful for positive outcomes in 2023. Don't forget to subscribe to CryptoFlix YouTube channel and turn on the notification icon for more educating videos.